Recently, digital outages disrupted operations of HDFC Bank and State Bank of India. Digital operations include internet banking, mobile banking and payment utility services. Since HDFC Bank had faced two outages in 2018 and 2019 as well, the RBI asked the lender to halt all new digital launches for a while. Let's do a three-point analysis to understand the root of the problem and how it can be tackled. Number 1. Tech investment. Banks either reported technical glitches or pressure of increased digital customer traffic. Banks have been partnering with companies like IBM and Oracle for technology, accounting for 2 to 3% of their revenue on an average as per analyst. Banks also have their suitable technology infrastructure built in the process. Then what's the problem? Well, according to experts, it's about investing in the right capabilities at the right time and complying with complex processes laid down by the Reserve Bank of India. Digital transactions surged amid the pandemic, which means banks needed to make additional servers available. Getting a server ready, though takes less than 2 hours, the process to get it approved based on RBI guidelines take a month. In addition, since these servers are third-party properties, banks have little control over how they are managed. It depends on how proactively the traffic was predicted and managed. Number 2. Credit negative. Moody's said that HDFC Bank's multiple digital outages are credit negative, immediately dipping its share price. As per the global rating agency, the recurring outages also risk hurting the bank's brand perception among a growing and increasing digitally savvy customer base. As a result, the regulator took action in response by halting digital launches. According to reports, daily transactions stand at 100 million with a volume of rupees 5 trillion. But that's not it. It is set to jump to 1.5 billion transactions worth rupees 1.5 trillion, worth rupees 15 trillion in 5 years actually. Number 3. What is the solution? A robust banking IT infrastructure with sufficient security system, and of course to ensure that data centers need to be prepared to handle the scale. For that, banks also need to invest in artificial intelligence, cloud and machine learning capabilities. While cloud service will provide the scalability and flexibility, artificial intelligence and machine learning can predict transaction volumes for any time of the day. Experts also point out that investment alone will not be enough. For both small and large banks, processes need to be simplified, which has been one of the biggest challenges.